now on this. And I just simply use a little bit of technicals, and then I use the sentiment or the fundamentals to give me a driving force. So we had the price core started dropping on us. See what type of entries it gave us on the 15-minute. 15-minute, it gave us a nice pullback coming to the drop. One thing I will show you guys is if you ever get a drop and it's breaking a level, you can always pull out your Fibonacci retracement tool, and you could take it from the break. So I want to take it from the high down to the low, and you can mark off what levels. As you see, we got to the 50%, and the 50% is usually the middle ground. If it goes above the 50, then we consider this more of a trend reversal and not a retracement. But if it comes up to the 50 and it drops, that shows us it was just a retrace. It was just a retrace, and price should continue to go down and possibly make us a new low. So right now we're waiting for see if it's going to look like it's going to break out and give us a new low. And right now I'm up. I got the order stacked. So I'm up about, right now I'm up about 53 pips. Shooting for about 150. So we're going to just let that thing run right there. We're watching IDUSD as well. I like to start from my higher time frames and work my way down. And I do have another view of this. So we're going to look at this chart down here. Now this setup that I have is called a three screen or a 3 trigger entry system. So if you notice, I got 3 different charts here, and each of them can have a different time frame. I like to look at it like this with my main focus up here and then 2 smaller ones, but you can always do it like this with a 3 trigger entry. And what you're going to be doing is you're going to be looking from right to left. So you'll have a smaller time frame here, bigger time frame, a bigger time frame, and that's going to give you view. That's going to give you views. Let me add somebody else in. That'll give you a view of exactly what's going to be happening in the chart. So like what we'll do is we'll start it. We're looking at a higher time frame approach. So I'm gonna change this one here to the hour. I'm gonna change this one to the 4 hour. And I'll leave this one on the daily. So if you see, I kind of set myself up with some redundancy. I can see the smaller time frame. So when it starts to push, I can see a higher time frame. So I can kind of check my levels. And then I see, you know, the big brother or the biggest time frame. So this is going to be called a 3 trigger entry system. So you're going to have 3 different views of the market, and you can read it from right to left or left to right. Some things that we can do with this is we're going to be able to find different setups. If you guys notice, I got one that's a kind of like a price action or a naked that I draw on. I have one that's giving me EMA readings, and then I have one this one is naked as well. But I can also add on some things like a Bollinger Band. So I see on the 15-minute, this is going to be my current or the present. I'm looking at the present here. I'm looking just like right around the corner here. I'm looking, basically this is kind of going to be the future with the longer time frames. So the longer time frame is going to represent the future and the past for me. These are going to be more in current time. So if I see this react, I remember that the market is fractal. So whatever happens here is eventually going to pull up and start happening here. So to give you guys an example, these are going to give me more movements because they're smaller. But if you see, this chart looks similar to this chart just looks bigger than this chart because it's a smaller time frame. So there's more movement across the board. So you see you have the consolidation, the little bit of a dip, to shoot up. The consolidation, the shoot up. We look here, we got the little bit, it's a little less consolidation, the pullback, the shoot up. That's a representation of the market being fractal, or the market coming from one time frame and working its way up to the next time frame. So I always work from the higher time frames down. This is going to give me more data as to where the market has been, so I can make a more educated choice. So I'm looking at AUD USD. It's not going to move as much, but I do see I'm kind of getting to a level that we didn't been at before. I'm also seeing we're getting close to the Bollinger Bands. Look down here. We're still getting a good push here. So I'm working my way into smaller time frames. This is actually an hour chart. Let's look at the 4 hour. So right now it broke this area. I want to try to identify if this is going to continue or if this is going to break back down. So right now we shouldn't be in the trade. We should just be waiting to see if it comes back and retest and bounce off. Then as we start learning about volume, I'm going to teach you guys some things that can confirm this is going to be a continued move. So on the 4 hour, you know, we could push a little bit higher and then break down. And that's basically what I'm kind of looking at. I'm looking for the market to push a little bit more, kind of come towards some of these, what we will call quarter points or round numbers, whole round numbers. So we could push our way up to, you know, 66, but I'm looking at everything as a selling opportunity. So as you guys progress in your trading, like a lot of people say, follow the trend. But me personally, I'm more of a what I believe is going to be the best move for my end results. So just because I've seen this going bullish, I'm not in a rush to just try to get in bullish. I feel like personally, because like I tell y'all, I look at this fundamentals, so it's letting me know that long term, the ID is going to be should continue to go weaker. US dollar drops ahead of GBP data. So that lets me know that the dollar is starting to lose a little strength. That's why I'm having this bullish momentum. I don't see it being long term. So now I'm just going to stock and I'm waiting for me an entry to the downside, even though it's going bullish. That's not what I want to take. And if I miss the trade, hey, I missed it. That's fine. I'll just miss that trade. But I'm already in position. So when it does get ready to come back down, I'm kind of expecting it, giving me a pretty fire entry. So right now I'm kind of, if you guys are familiar with channels, somebody was just trying to join. Let me see if I can. Well, they left now, so they're just gonna have to wait. So if you guys are familiar with channels, got a trend channel here. We'll say about right here. So the market's been playing in this channel. Got an area right here. This area is an area of importance for me. I want to see how the market reacts here. If you see, it was an actual ceiling. And if we just look a little bit to the left, we start to the right, look to the left, it was actually a floor. So that lets me know some big player is sitting here. We're going to see what decision they make when price gets up here. So I can even give it, because it's not going to be an exact. Price could come up. This is a 4 hour time frame. And as the time frame progresses, we may be in hour 2. So about hour 3 or 4, I want to see what the market's going to do. Is it going to start wicking? So I give it a little bit of room. I'm going to go ahead and put an alert a little bit above where I think it's going to start rejecting it. Now I have me a setup. I'm waiting on this setup. And we correspond with it. So if it comes up and it wicks, I got a fire entry to come back down to the downside. This is kind of how you start avoiding fake outs. So if it wicks, it start coming down. My next level of interest will be see how it reacts when it gets back into the zone. Is this going to be a pullback?